Oliver, we all know that yogurt is a strategic French industry. I think that a former president declared it so once upon a time when somebody was stoking Danone. And now this American investor, Nelson Peltz, has bought a 1% stake in Danone and is looking to make making various demands on management, saying give us back more money, and there's lots of room for improvement here. I mean, this is going to raise a lot of eyebrows in Paris, I suspect, this move.
It will. I doubt they'll like somebody, particularly an American, coming and poking their noses into the yogurt industry. But Nelson Peltz has quite a history in the consumer goods sector. He's been involved in Cadbury and Kraft and Wendy's in the past, so he's got quite a track record in consumer goods. His demands for Danone, he wants to see more cash returned to shareholders, and he wants an improvement in profit margins from about 14% now to about 15%. So that's what he's hoping to achieve. I
mean, I guess that the fact that he has taken this stake suggests that he thinks the company is undervalued. But I wonder whether that's true or not. I mean, it's, consumer goods is a tough industry. It's very competitive. There are some very big global players out there, and companies are valued at what the market says they're valued at.
They are, and then the market says that Danone isn't worth as much as perhaps it used to be. The shares are more or less flat over the past year or so, but it's had a very difficult year. It's had a profit warning this year, largely because of problems in Spain, where it's had to cut prices to compete with own label goods. And that's still a very big part of its business. Europe and dairy is still a huge part of what Danone does, although it's also expanding in other areas. But the shares, because of that profit warning, are at a discount to Nestlé, which is its closest comparator company. So perhaps Mr Peltz thinks that by improving margins, returning cash, we can close that valuation gap a bit.
Yeah. Now, he has said that he supports the chief executive of Danone, Frank Riboud. So I guess that it's possible that the two could meet halfway here. And I mean, this is the kind of wake-up call that a lot of companies might actually need, given that if they've been in place, if the CEO has been in place for a long time, like the man at Danone has, then there probably is room for improvement. I wonder what the prospects of that are, given just the state of markets and the way in which these kinds of operations tend to sort of fizzle out after a while.
Well, it's hard to know yet. Danone hasn't said anything, and Nelson Peltz has only taken a 1% stake in Danone, so he's not a huge investor, albeit he's quite a significant one in terms of his profile. There's also a question over how much Danone will be keen to follow his instructions to return a lot of cash to shareholders. They're already doing that. They already have a share buyback program underway. But I wonder if they might not be better served thinking about acquisitions and improving margins by going into higher margin businesses, either in infant nutrition or emerging markets or some of these areas. And it might be better perhaps to conserve some of their resources for those sorts of acquisitions or that sort of expansion and improve margins that way, rather than simply returning more to shareholders.
Okay, so there's clearly Nelson Peltz has given Danone a lot of food for thought with his arrival on its shareholder register. Let's wait and see what happens here. I think this could be very interesting. Thanks, Oliver.